Hi guys, Sergey, thank you for coming. Sergey Gribov from Flint Capital,
Thank you for having me.
Investor Slide. Okay, self-introduction. Two
Uh,
minutes, 2 minute speech from investor.
sure. Sergey Gribov. I based in Boston, originally at some point from Russia, lived for many years in Israel. My background is technical. I have degree in computer science. I've done programming, operations, cybersecurity. At some point, kind of switched to dark side, went to MIT, did business degree, started to do some angel investments, and last 6 years, I'm with Flint Capital. We are an early stage fund. We a little bit different from most of the funds in a sense. What we run completely distributed shop. We remote first. We never work from single office. We have people in Boston, Silicon Valley, Europe, in Israel, and we invest a lot in early stage companies from Israel and Europe, help them to come to US. I would say actually more than half of our portfolio is Israeli companies, quarter Europe, probably quarter US. We do seed and A rounds, early stage, across different segments. We do both B2B and B2C, cyber, digital health, fintech, voice tech, DevOps, many different segments. That's kind of in a nutshell.
Let's talk about insights in this year and beyond next 15. What is the next big thing? What do you think? It should be artificial intelligence, VR, XR for the maybe gaming, education, decentralized finance, robotics. What it should be? What do you think?
I think there are a lot of different trends. It's still too early to say which ones are gonna catch, but I don't like to say what artificial intelligence is a trend. Artificial intelligence is technology. So if you look at our investments, pretty much in all of the investments, there is some kind of artificial intelligence component to it. But it's not like we're investing in AI. We're investing in products which use AI to solve problems. In terms of trends, I think there's a lot of interesting stuff going on in digital health, for example, because more and more things can be done by AI, which can augment the doctor. It can help to solve a bunch of inefficiencies in the healthcare system, especially in the US one. There are a lot of interesting stuff going on in cyber, because cyber is it's a little bit different than many other sectors, because you're kind of playing against our team, which is the team which is trying to break into computers. And it's always moving. There are always new attack vectors, and there are always new products which solve these attack vectors. One of the interesting trends, which for us, for example, we started to look at it probably more than a year ago, is everything related to age tech or silver tech, basically the technologies which will help people, average lifespan is getting longer, and people worried about quality of life more than just age when we die, and more and more people are interested to kind of age in their own apartments, not to go to nursing homes. On top of that, also, if we kind of look at this space, 20 years ago, most of the older people didn't have smartphones. Even 10 years ago. Nowadays, people comfortable with smartphones, so it's much easier to get technology to them. So we actually did the first investment in a space, Sense AI, which is technology which allows you, and it's AI, but the important thing, it's a product which solves real problem for kind of care agencies. Regarding the robotics, obviously there are a lot of interesting stuff going on. We're looking at some things from time to time, but we don't feel that we have enough of expertise to get into robotics. We had a company which called Walk AI, which was in more voice technology. That's another thing. We're gonna see more and more voice interfaces. And this company, for example, it created digital call center agent. So you would have call center agent, which is robot, a computer which would call people and interact with them. And as opposite to what is here now in most of the what's called IVR, what they did, they had a voice agent which we actually did a test in one of their customers, and in 96% of the cases, customers would not recognize what we're talking to robot. They would actually think we're talking to a real person.
Interesting.
Yeah, the company actually, it was an exit. The company got bought by Snapchat.
Wow.
2 months ago.
Why voice technology for the Snap?
I can't elaborate on that. We signed a bunch of different documents. It's kind of...
Congrats. No, it's a great idea.
It's kind of mystery du jour why Snap bought a technology for
the voice?
Voice call center agent.
But yeah, but this maybe should be like the next trendy thing, deep fakes for the voice.
I'm not going to comment on any of it because
no, but it's great.
Idea why,
it's
but
great.
I can't talk about
it's great. What about decentralized finance and next big thing in finance? Because I know,
I mean,
digital assets and something for the payment processing, something new for the travel and restaurant stocks. What do you think, like a cloud and artificial intelligence? Because after the Biden, it's looked like the COVID-19 plays. What do you think?
Regarding with decentralized finance, I'm not a big fan of crypto. I mean,
are you skeptical or are you?
Look, I am not skeptical. I think, in some sense, the reason for lots of crypto because the regular finance is, from one side, inefficient, but from another side, and the bigger problem is government controlling all the financial transactions. Nowadays, if you want to send money from one account to another, there is no way to do it without kind of, especially internationally, without like all kind of financial institution to know. So people created a lot of cryptocurrencies where you can do this stuff without getting noticed. In some sense, I think there is a lot of interesting stuff which can happen there. I frankly, and I would kind of, I wouldn't put together blockchain and like cryptocurrencies because cryptocurrencies just use of blockchain. Blockchain, I yet to see, there are a lot of developments were done in blockchain, but I yet to see what's I call killer app for the blockchain.
Yeah.
Basically, I want to see something there is a real problem. Blockchain is actually solving this problem and solving it well, and there is no solution without blockchain. I haven't seen anything like that. We'll see. And frankly, it's a new term, but use of hashes and encryption to sign things is known in cybersecurity for probably around 30 years. So it's not like blockchain is something really new. As far as cryptocurrencies, I mean, there's no intrinsic value in specific cryptocurrency like Bitcoin, in my opinion. So the value of Bitcoin is depending only on supply demand and basically depending only on psychological thing. If there are enough people believe what there is a value in it, then there is a value in it. But if for some reason a lot of people will decide what there is zero value in Bitcoin, the Bitcoin will crash. There is no like real value in this thing besides that. It doesn't mean it can go up. It can go up, and it can go up a lot because it's enough people believe in it.
Interesting. And what's going on with startups? What are the skills needed to be a unicorn founder during the COVID? What do you think?
Frankly, I don't think there is a difference during the COVID or without COVID. And one, unicorn startups are not built during 1 year. They usually built over the course of many years, right? And if you want to build a unicorn, you have to find a problem which is really a problem for many people, and you need to solve it in a way which is way better than any solution out there, and you need to provide real value. So all of it have nothing to do with COVID. I think COVID changed how people interact. COVID changed how things are done in terms of like remote work, etc. But it doesn't mean, one, I don't think COVID changed something from like 0 to 1 kind of thing. So it's not like something which wasn't possible before, but now it's possible, and vice versa. I think it's kind of temporary, so we'll get back to something closer to normal within, I don't know, half a year, maybe 2 years. It doesn't really matter. But at some point, we'll get back to normal. So if you're building something which is only based on the way people do it during COVID time, you will be probably obsolete in 2-3 years. I think COVID accelerated some processes.
So what kind of processes?
For example, remote work. People were working remotely. But in many companies, they thought, okay, if people are working remotely, it's kind of perk. We're going to allow them to work remotely 1 day a week, but it's not really something we want to encourage. People forced them to go fully remote, so suddenly companies realized we can actually work with it. We can actually do stuff completely remotely because people are actually more productive when we work remotely for some time. I'm not sure people will stay as productive forever. So I think what we'll see after the COVID, well, I wouldn't say gone because it's not going to be gone, but at least the quarantines will be gone. We'll see what companies would allow people to work remotely much more, but it will be some kind of going back to the offices. So the same process, maybe it would take like 5 years. Now it took 1 year with COVID, but it's not like it's created new process. Same thing for telemedicine, for example, and that's actually another trend which we see a lot, and we actually have company. It's funny, we invested in a couple companies right before COVID hit. We did one investment in like January last year in a cybersecurity company for zero trust / remote, which enables remote work. We invested in VR platform for healthcare right before COVID, XR Health.
You're lucky.
Yeah, I guess so. So for telehealth, for example, people were forced to go telehealth, but there were some trend related to telehealth even before COVID. And now what COVID enabled people to see, because we're forced to go to telehealth, suddenly we understand what telehealth is actually a good thing. You can do a lot of things much cheaper. You can do a lot of things way more effectively, because instead of going to the doctor once every couple of weeks and doing some things, you can suddenly using telehealth to get some help and from the doctor every couple of days, and you can do many more interesting things. So, like for example, the XR Health, our company, which is VR for healthcare. So we work, for example, with physicians. So usually I don't know if you needed to go to physician, to physical therapy. The way it works, you go to physical therapist. He will show you how to do things, and you will come to see him maybe twice a week. And the rest of the days you're supposed to do stuff at home. Guess what? Most of the people don't do anything. So at the end, instead of doing every day the exercises, we do it twice a week with physical therapists, because they have to come to the physical therapist office. Now with XR Health, instead of doing it with physical therapist twice a week, we can do it home. We can play with in VR with these things every day, and physical therapists have ability to see what we are doing, how we are doing, see the statistics, so he can actually make sure that we do stuff every day.
Mm-hmm.
So the whole treatment is way more effective. So I think telehealth is another area where it's gonna be some interesting stuff coming out of COVID. Telehealth connected to AI, and you have companies who trying to solve healthcare problem with like healthcare very expensive, when you basically use AI to make sure what, for example, instead of like when you come to the doctor, you would spend 1 hour with the doctor. Nowadays, you can use AI in telehealth, and maybe instead of spending 1 hour with a doctor, you spend like 20-30 minutes with AI, which will put everything together, and the doctor just need 10 minutes with you instead of like the whole hour, because the AI already asked all the questions, already checked all the relevant info from your medical records, etc. So it can help both kind of telehealth, and it can help the lower price of the treatment significantly.
Yeah, it's a great use case. What do you think, what is the most important thing for the startups during the fundraising? How to find the right investors and land investors? What do you recommend for the startups? Because you should be on Zoom.
It's so in terms of investors, I mean, there are plenty of materials out there. I wouldn't say anything new or particularly interesting, but basically you need to find the right investor for a startup. You need to do the homework. Basically, what I say to every startup, before you actually meet or talk to investor, you need to spend enough time to understand what is this investor interest, what is he looking at, and his typical investment look like. Mm-hmm. So you want to do your homework, and you should know what investors who you're talking to are the right investors for you. Because if your startup is in one space and this investor is looking at another space, you're going to waste his time and your time. And plus, like where to look for investor, it's also a known science. You need to find references, and actually you need to find warm introductions. But before you're taking money from investor, it's a good idea to check references on investor as well as investors checking references. So it's just the same process. You're going to be stuck with this investor for many years. But in terms of getting to investor, usually warm intro. Best intro is our portfolio company founders or other investors or somebody with investor trust. There are some investors who would never take cold email. I'm looking at cold emails and I'm trying to answer them if they're relevant. So for example, if somebody sent me an email, I have a startup in this area and this is really area where I'm looking at, I'll at least try to answer. Mm-hmm. Even if I understand from the beginning what probably it's not an interesting investment for me. But if I'm getting email, we created this new blockchain technology, which is amazing, I wouldn't even bother answering, because anybody who would spend at least 5 minutes of their time and looking me up understands what I'm not investing in these things. Or different therapeutics drug. It's just not my area of expertise.
Yeah.
I can't invest in this.
Yeah, you're absolutely right. And it's interesting about warm introductions and reference. I'm totally agree. Okay, and what do you think about venture capital? What's going on and during the COVID, and basically understanding the technology landscape and venture capital ecosystem, how it's changed over like the last 5 years, and what is like the trends in venture capital? What do you think? Because it was like, yeah, it was all about Robinhood and stock exchange, Reddit.
Well, Robinhood have nothing to do with venture capital. It's like it's retail
No,
investing.
it's all about capital. Yeah.
Yeah, but for if we're talking about venture capital, if you're talking about last 5 years, where there are more and more money coming to capital, especially some of it due to we have very long low interest environment. So basically, if you sit on money, you don't have that many options where you can get your alpha. You can invest in stock market. You can. Everybody is looking for returns, so a lot of money is going to venture capital and private equity. So if you look at the amount of money in venture capital, the industry is just kind of growing and growing and growing, which in some sense creates a problem in general because there's too much money. The valuations are starting to get to like really red hot. It's like one of the guys who is on board with me in one of the companies, he said right now everybody is multiplying something by 20. It used to be what we were multiplying something by 10. Now we're multiplying everything by 20, and everybody is multiplying different things. Some multiplying current ARR, some multiplying current bookings, some multiplying the ARR which you expect to have in the next year. So it's crazy. In terms of VC, what happens?
Plus crowdfunding too. Yeah, it's for the
I don't see crowdfunding as really like
innovation.
Crowdfunding really never took off for startups. There was some tries to do crowdfunding for blockchain projects to ICOs, which mostly were kind of fraud anyway.
Yeah.
But in startups, I frankly I haven't seen any really good startup which went to crowdfunding. If you do some hardware, you can go on Kickstarter and get some money.
I mean like the seed invest.
It's not really crowdfunding.
Yeah, it's for the actually companies. They can use seed invest and crowdfunding platforms for the equity.
What platforms are you talking about?
Seed invest.
Yeah, never saw them actually.
It's like the Republic too.
Yeah, from time to time there were different platforms which popping up. I think for angels, there are like angel syndicates, which I wouldn't put it as crowdfunding. It's a different story.
Mm-hmm.
It's basically, and angel syndicates are a good thing because basically the way it works, you have some angels who doing it for some time. They have great track records, and we have some new angels who kind of joining them with their checks. So from one side, it allows you to, for the angel who is kind of more professional business angel, to earn some more money on because we're doing work, we're finding great startups, we're doing due diligence, etc. From another side, it allows angels who are just starting to participate in these things. So I think it's win-win for everybody.
Mm-hmm.
But I would not classify this as a crowdfunding because still, in order to do it, you have to be like accredited investor. So we're talking about people who are basically angel investors. They just starting maybe, or they're doing it part-time. and I think that's a good thing.
Mm-hmm.
But that's not crowdfunding, in my opinion.
Yeah, yeah. What do you think? What should be in the top focus of the attention for the startups, for the investors during this crisis?
So it,
Yeah, and maybe like
if you
your
look,
special advice for the startups to stay alive now.
yeah, if we look back, it all depends on which stage we are in. If you look back, like March, April timeframe, basically everybody was thinking, okay, the market gonna tank, the economy gonna tank, and we're gonna have like year and a half, 2 years or 3 years kind of nuclear winter in terms of funding. So every single VC I know went over, and we did the same thing. By the way, we went over all our portfolio company, and you made sure what all your companies are well capitalized to kind of survive this nuclear winter, which basically meant what every VC went over their portfolio and made sure everybody has like 24 months of runway at least. So there were a lot of these funding rounds, which were kind of extension rounds of the previous round, where people would put more money into the company to make sure it's properly capitalized, so they can kind of they can survive this. Now, it created some funny problems. So, for example, if you think about company who was planning originally to raise around, let's say, third quarter of 2020 or last quarter of 2020, we were recapitalized, so we don't need money. So basically, a lot of funds who invest in later stage, at the second half of the year, their pipeline completely dried out because nobody was raising. No good companies on the later stages were raising money because everybody had enough money for 2 years. So it created another, I think, wave now, because a lot of these funds were sitting on money. We didn't invest it for half a year or more, and we need to deploy their capital. So what I see now is what a lot of these funds, we're trying to do preemptive rounds. So we're coming to the good companies and we're offering them money. I have one company, I can't say the name, I can't say whatever, but I got a term sheet from the top tier fund at valuation. Within 3 weeks, we came up with valuation which were more than 2x of the original valuation. And we're talking about 4x valuation on the round which happened in summer.
Wow, congrats.
Which, frankly, I mean, the company is really good. They have great progress, they have great traction, but frankly, the main reason why we're getting this valuation, because just there are too many people with too much cash on their hand, and this cash burns for them. They want to deploy it, and everybody is trying to deploy as much cash as possible.
Yeah.
And basically, in many cases, the negotiation you end up with is not even about valuation, but I don't want to give you more allocation in the round. We don't want to raise bigger round. We want to raise whatever the round we want to raise. And people are just trying to pump money into good companies. So that's one thing in terms of like what happens between like. I think also there is like. So if like a year ago, a little bit more than less than a year ago, in March or April, everybody was saying to their companies, okay, conserve capital, make sure you're gonna last, because you need to get to the other side of this crisis. Probably somewhere by mid-summer, everybody realized what it's probably not gonna be that bad. It's probably gonna be in some shape or form the type of recovery, and everything is fine. And if I look at our portfolio companies, for most of them, we haven't seen a big dip in like revenues or dynamics. They're doing fine. Some of them actually got acceleration because of the COVID. So the company, it all depends on what company you're talking about, what segment we are. Obviously, if you're in travel, yeah, you kind of you need to conserve cash.
Yeah.
Possible, because you need to survive this.
Yes, exactly. But for the like the best startups, yeah, it makes sense. Okay, do you think is it possible for any tech startup to become like the mega player, like YouTube, Amazon, Facebook? What do you think? What it should be like the competitive advantage? Look at the Clubhouse, for example.
There are startups. So in order to become a mega player, you need to have really good solution for some problem people have, or you need to create something which is very valuable to a lot of people. That's one thing, and you need to have really good competitive advantage, because you can find a good product, and once you're getting at least some attention, you'll see competitors popping up very quickly. So you need to have very good competitive advantage, which enables you to preserve your position in the market. It can be some technology, but in many cases, the best competitive advantage is network effect. So like, there's nothing too complex about building Facebook type of site, right? Build it very easily, but you're not going to get users from Facebook because there is a network effect. Because if everybody else is on Facebook, people are not going to move to another social network. So once you build this network effect, it's very hard to get to you. Same thing with Amazon. It's not Amazon. Yeah, Amazon is doing a lot of things very smart way, and they built like all logistical thing, infrastructure, etc. But frankly, nothing prevents you from building another marketplace. But nobody is going to come to your marketplace until you're going to have all the merchants Amazon have, and none of the merchants will go from Amazon to another marketplace because the customers are not there. So once you get to this network effect, it's very hard to move around. Clubhouse, it's an interesting thing. I never tried actually Clubhouse, so I can tell you.
Send you invite.
Huh?
I can send you invite.
Oh, I got like bunch of invites. I can't.
Really? Yeah.
I don't use Apple products.
You showed like a special room with Horowitz.
Well, I can't use it because I don't have iPhone.
Wow. Why do you think they use only Apple platform? Why they don't want to use
a lot of applications? Apple users are usually willing to pay way more than Android users. So for many, if you look at the premium applications, you will see what like 70 to 80% of their money is coming from iPhone users. That's the way of life. But
maybe it should be like the embargo.
Also, I can't play with it.
Yeah, makes sense. Okay, there are the best, like the short-term investment opportunities. Give me some advices about my millennial capital. What I should to do with my retirement funds.
When you're talking about investments, what do you mean?
Like investment opportunities.
There are different asset classes.
I don't know. Like maybe alternative investment, like maybe stock. There
is stock market, and if you do the right thing, the stock market is going up, and you can make a lot of money in stock market. Like I did brokerage accounts for my kids, although I manage it, but
really?
they already have, I don't know,
it's so funny.
4 to 5x on their money in their brokerage accounts. So yeah, startup investing, I think you shouldn't do startup investing until you have money you can actually afford to lose. Frankly, you shouldn't be doing stock investing if you can't lose this money either, if you can't afford to lose this money. But startup investing, it's really like high risk.
Yeah, high risky. Yeah.
And on top of that, stock market, at least you can get your money out at any given point of time. In case of startups, you kind of bury your money for like 7-8 years. So the duration is also a problem.
Yeah, you're right. Well, what is your advice for the TikTok generation and millennial guys who want to go to the entrepreneurship, who want to stay like the startup? What is your advice?
I mean, first you need to figure out if you really want to do it. Because I don't think it's for everybody. I know I have a lot of friends who ask me at some point, should I go to work at startups? And I said, no, you probably shouldn't, because for some people, stability is more important, and we feel much better in a situation when you have a stable salary and stable company. Now, if you okay with risk and if you can handle the risk, then I would say by all means try to do it, because frankly, when you're young, it's the best time to take risks. You don't have family, you don't have kids to feed. Why not? Because by taking bigger risks, you have a higher chance of getting to bigger returns. So if you psychologically okay with taking risk, I would say by all means take as much risk as possible. Do risky things, try different things, and try entrepreneurship, or at least look for position at startups. Even if you don't feel you want to be entrepreneur, you still can work as employee in startup. It's still much more fun, in my opinion, than to work for a bigger company, and much more rewarding. But you need to be okay with being in an environment where sometimes you don't know how to pay people's salaries in 2 months.
Yeah, it's really important. Okay, thank you so much. And what is the most challenging thing today for you personally and for your team?
It's interesting. For us, the last year was business as usual, frankly, because from the beginning, we were remote first. We never worked from the same office. So we just continue to work exactly like we worked before that. I miss travel.
Yeah.
A little bit of travel. I went to some regatta in Turkey and went some skiing, but it's nowhere near the amount of travel I was doing before it. I usually in normal times, in Israel every couple months for several weeks, and I miss that. So yeah, I would like to do more travel. Hopefully, we'll be able to do it soon.
Yeah, in this year maybe.
Yeah, otherwise we're doing the same thing. We're doing it on Zoom. I miss meeting with people person to person, but it's not. I mean, I understand we're kind of lucky. We can work. There are a lot of people who have way bigger problem when we are. So
yes, exactly.
It's fairly good year.
Yeah, you're right. Okay, thank you for this live stream, Sergey. It was so helpful for us. Yeah, see you personal. Come to New York City.
Yeah, I've heard there's not that much fun now in New York City. Somehow, most of people I know from New York City moved elsewhere.
Moved to the Boston, Miami.
Yeah.
Yeah, but maybe in June,
Yeah, we'll see. I have a company in New York City, so I used to come fairly often, at least like once a month.
Yeah. Okay. Thank you so much. Have a good one.
Yeah.
And thank you for the
Thank you
conversation.
for having me.
Yeah. Bye-bye.